Hello and welcome back guys to the channel. And on this video guys, I'm basically going to be explaining about this ultimate liquidity trap that most of traders don't know about, right? So let's get into it, right? So the type of liquidity trap that I want to explain in this video is a potential liquidity trap, especially on entries presented in this form, in this kind of way, right? You'd have something like this, or something like this. Tend to come lower and then go up, right? So this is what would normally have, right? So this is in a case of a bullish trend, right? And this is a case this is a case for a bearish trade, and in a case of a bullish trade, what you would have is, like the basic three things, which are structure, right, S&D, and confirm, right? So assuming that a trend is presenting itself like this, right, and you want to enter off on a retest here, right? You want to enter somewhere in here and take this price bullish to take these highs out. Now, lo and behold, what normally happens is that in this area, so let's just go a little bit down, right? So in this area here of a retest, right, before this continuation, right, this is the area that you would mostly experience this this kind of thing, right? And then you'd see price go down, go up, go down, and then come up, a slight retest, and then a continuation bullish, right? So this is the kind of thing that we're looking to explain here, right? So what we'd normally have is, a high, a low, right, a high with this break here to indicate that this is a bullish trend, right? And then price comes down to an area of demand, right? And then this demand gets mitigated, and after this mitigation, price is now ready to go up and take out this previous liquidity high. Now what we have in here, right, this area here is the most important part, right? This little area in here, right, in this box here, right, this is the most important part, where, as you can see, price now within this intermediary trend, right, price is bearish, right, by breaking this low, right, comes down, creates this low, and then price now goes bullish by breaking this high and creating this new high here, right? And with that being said, look at what price does. So this break here shows you that, okay, this is our confirm, right? This is price showing us that it's now ready to go bullish from here. So most of traders would take the entries here and position the stops just below this low, right? And then this comes this low, lo and behold, look at what happens, right? This low here creates this intermediary high that fails to break this structural high here, right? Lo and behold, price now comes down, it's very steep movement and takes out all the lows, right? So this is the liquidity sweep that we're talking about, right? So price goes bullish, breaks bearish, and then reclaims bullish by breaking this here once again, right? So let's see, can you see what happens here, right? Price goes bullish, right, goes bullish, tries to go bearish, right, and then reclaims the bullish structure, and then price runs. So this right here is the liquidity trap that I'm going to explain about, right? This is where traders get caught and, get taken out of the trades almost every time, and they end up not knowing what they're doing, right, when this is just a simple basic liquidity sweep move. Now let's go into the charts and see what happens in the actual markets, right? And just for mind you, right, the same is very true for a bearish trend, right? If price is going like if price is going bearish, right, if price is going price is going bearish, this break, right, and now we're waiting for price to come back here, right, to that area of supply, and then make that retest, that mitigation, and then go lower, right? So this is the area that would mostly experience something like this, and then price goes bearish from there, right? This area here, when most of people were positioned in this area with their stops above this high here, price tends to go up just a little bit over that high, taking that liquidity and then going very steep with a very strong impulse, right? So let's now go into the charts and see what happens. So basically, I like to make examples of the trades that I take myself, so that I can be teaching you guys what's happening in the market right when it happens. So this is the GU trade that I took, right? And what we had was this bearish market, right? Now let's see how this price was running, right? So price makes a low here, comes and makes a lower high, right? And then this high was formed by what? By this low here. So we're pretty much in the range of this high, this low to this high here. So price comes down and then breaks this low, which indicates what? So this is pretty much our break, our structural break right there. I know why is it loading. Okay, boom. So that's our structural break. Okay, and up of the structural break, we have two main areas that can be used as potential sells. We have this continuation area here, and then this original area here. Now, lo and behold, let's see how this thing happened exactly in here, right? So price comes up and then mitigates this area here. So let's go like to the 3 minutes and see what exactly happened, right? So this is price now coming up and then mitigating this area here. And from that mitigation, right, we can see that price now breaks lower, right? Breaks lower, right? Breaks lower, right? Breaks lower, right? This means what? Right? These are potential bearish entries with these sell stops just above here, which makes it what? A buy side liquidity. So if this is a buy side liquidity and there's a potential area up here that's still not yet mitigated, there's a very likely opportunity that these buy stops, or this buy side liquidity is going to be taken before price continues with its trend. Why? Because the true last buy before the sell that initiated the whole thing has not yet been mitigated, right? So you need to marry these concepts together, right? Mitigation is very important to understand. So the imbalance is in here. There's an area that's still not yet mitigated, meaning what? There's still bank orders and financial institutions orders lying in here, right? Still yet to be mitigated before price can run to its trend. So let's just clear that. Okay, let's put this just right here, the actual buy before the sell. So now we know that there's a lot of buy side liquidity existing between these highs here. Look at what price does, right? Price fakes to go bearish, right? And then fails to come and take out this low here, meaning what? This is a weak high, right? Because a strong high needs to take out a low. So with the failure of this high here to take out this low here shows that this high right here is a weak high and potential area of liquidity. So now we know that on top of here we have liquidity resting above here, right? So this is just an area of liquidity. So let's market that as liquidity and let's remove this little man in here, right? So let's try and make this a little bit bigger. 20. So this is our area of liquidity. Look at now what price comes to do, right? So price comes up and breaks bullish, right? And instantly with that break bullish, price comes, mitigates this area here, taking out this liquidity and then doing what? Re-breaking bearish. So with this break bullish and the re-break bearish, we now know that, okay, what happened was just a liquidity sweep move, a liquidity trap move, right? Just a manipulation move to take all these early sellers here, and the rest of this trend here, people who sold in here, right, have already been taken out by this and this high, right, which is what? This setup here, right? So now we can see how did price move, right? So price comes up, fails to go down, liquidates the high, and then goes boom, right? So now you can see that we have this top here and then this top here, which is exactly the same thing in here, right? We have this top here and we have this top here, and then the running move downwards, which is this one right here. So I hope this this piece of information was very much informative to you. Of course, I'm looking to keep this video short. Let's just see one more example from another trade I took. Then this was in the pound AUD pair, right? And we can see here, right? So I had this this GA setup, and in the beginning of the week, where I was looking to go bullish from here, right, all the way towards this high as the next liquidity run. Now let's see what price does, right? So price comes down, makes this low, right, and then breaks bullish with this break here, with this area here, right? So this price breaks bullish, and then price comes down. So with price coming down, look at what happens. Let's make this large enough. Okay, so let's clear all these and then, you know, remark them. Okay, so price forms this low that's in the middle of nowhere, and then comes up, breaks bullish with this high here, right? As you can see, it's a potential weak high. Now price comes back down into this area of what? Demand, right? And with price coming back down and leaving this wick here, this is a very good inducement for early traders who suffer these this thing here, right? FOMO, right? FOMO, fear of missing out, right? So traders who aren't confident with their trading, with their strategies, with their systems, are already afraid to miss out on this buy, so they go in as early buyers in here, in here, in here, in here, in here. As you can see, all these wicks here indicate people trying to force these buys, right? But look at what price does, right? So price comes in and then makes this low here, and with price making this low here with this wick, people are already funneling into buys, right? Price consolidates around for a while, right? So this is the argument between buyers and sellers. And then look at what price does, right? Price breaks bearish and then re-breaks bullish for the continuation to the top side, which is what? So let's just mark this move, right? So price comes down, comes up, goes even down, and then boom, right? So now we have this bottom here and this bottom here, which is exactly the same thing I drew. That price in a bullish scenario would tend to make a move like this, right? Sweeping out this high with this move here as the liquidity trap. Now that's it on this video, guys. I hope this video was very informative to you, and if it was, then don't forget to like, subscribe if you haven't, turn that bell button on for notifications, and until the next one, guys, stay safe, have a nice trading week, and as usual, peace out.